Hello, this is Coach Mike from WinningStockCoach.com. I'm going to get started with this week's market overview video for the trading week beginning September 22nd, 2014. Starting out here with the SPX, I've just got a one-year weekly chart shown. I want to go over a couple points that we discussed over the last couple weeks of some importance. First was our prior weekly high swing point, which is 1985.44. Last week's video we talked about how the prior week had come and closed just above it, and we would have to be looking at continuation up or down from it to justify the next series of trading. So what we got here, as you can see with last week's weekly candle closed, is not only did we move above it, we actually broke and closed above the swing high close from a few weeks prior. So had a little bit of consolidation range made over the past 3-4 weeks that you were able to break above and close above yet again, moving us just a little bit closer to a few of the Fibonacci targets that we've had on the S&P 500. 2027.03 is the one of, I guess you could say, most relevance to me. It's a longer term target, but we do have that 2033.81 that I'm suspecting we might have a shot at hitting as well. I do want to kind of point out though that as far as the S&P 500 is concerned, I'm going to go over here on a daily chart. Friday, if you were watching Friday's trading, quite a bit awkward. Had a bit of a gap up, and the S&P 500, the SPX, you saw quite the run up, yet a close just slightly red for the day from Thursday. Now if we mark that over on our daily chart to the same points that we were just talking about from our weekly, you'll see though that that daily close from Friday still happened to close above the breakout point. So what does this mean going into the upcoming week? Just like last week, positive movement from here gives you a new support point. You're not going to have to use that weekly swing point that's annotated by this line of 1985.44. You will now have your support level at 2007.71. So moving forward, if you continue with positive movement, very simple support level to play. Start watching your 27.03, 2033.81, 2 points that, you know, I think we could have some relevance towards and an opportunity to hit if we continue with the positive movement. If we don't, then I think we'll be back in the type of series we were in, right over here, right over here, right over here, several times over the past year, where we would make a decent move and we would begin consolidating, though the consolidation pattern would have a slightly up articulation. Just like I've been covering for the past 5 weeks now in the market overview video, that after the market had bottomed, we expected a 3-week run up and then a time of that consolidation with a slightly up articulation in it. So if you've been following the market overview videos, S&P 500 coverage spot on in what we've talked about. We got our 3-week run up after calling the bottom pretty well. We got into our consolidation, and here you see that we get a slightly up articulation. Very important to see how we continue early in the week, but as far as the simple trade to make with positive movement, it'll be very simple to make with a new support 2007.71. Over now to the Dow Jones Industrial Average daily chart. Had a longer term target that we've been talking about for several weeks now of 17,306.26. You see Friday we spiked just a bit above it, pulled back to close under it, that was a longer term target that I had been watching. But, I'll tell you, just like I tell members at the coaches roster, targeting areas on a chart for me aren't make or break, like, oh, you have to sell right at this point. You sell on the confirmation of a pullback from a point. As a matter of fact, we love it when our targets are broken, because if we enter a trade after establishing a risk to reward ratio and analysis that we're comfortable with, and we get to our target or exceed our target, it's even better. So give it the chance to see if it's going to have the opportunity to make a little bit of a pullback. If so, you have to treat that as a pullback from a resistance point, from a target point, and you might want to reduce longs, take in the money puts to protect them, leverage yourself a bit. But overall, with the DJI, we broke out of the consolidation range that we had been talking about over the past few weeks, which would give us a new support at 17,137 and 36 cents for a closing support point, close of day support point. And that's what I'd really be watching for moving forward here. Had a real strong week on several stocks. One of them in particular, I'll be the first to admit, I didn't expect it to continue much, if any, over the $184 price, Goldman Sachs, and it ran up into the 188 range. Had quite the pullback on Friday, but some of these blue chip stocks, the 30 stocks compiled in the Dow Jones Industrial Average Composite, something you might want to be watching early in the week, because at this point I believe that if they're going to get continuation to the upside, that there are several of the DJI charts, individual stocks, that are at points on the charts where you could actually see some breakouts made, and that would be supported with the positive movement on the Dow Jones Industrial, should it do it starting tomorrow. Otherwise, about the other half of the DJI stocks are at points where they could have pretty severe pullbacks due to how hard they ran in the last week and a half, that could cause a little bit of panic selling, could cause opportunities to short. Several things looking at the DJI for this upcoming week that could be possible and highly probable. The Russell 2000, kind of a slow mid point of the week, Tuesday, Wednesday, Thursday, a slow upwards movement. And Friday, as you can see, gave it all back. Russell 2000, as I've covered the last couple weeks, made a little bit of a change in its pattern, kind of establishing a new channel. I've got it marked with this gray channel line, or this gray channel lines. And seeing how Friday gave back the entire week's move from Tuesday, Wednesday, Thursday, I still think we're in the continued downwards pattern, but I'm not so sure just yet. I'm not personally convinced just yet. It means the world's going to end for small caps, and that we're going to fall and give up lower than 1083.26, which is a longer term target area from this horizontal channel that's been created that I'm watching. But what it does have me suspecting is that I personally, for my money, won't have much interest in small cap entries until I see the Russell 2000 around this darker blue trend line. It comes up from my weekly chart. You see we had these two bounces on it in the past few months. We had one in May, we had another one in July. That would be an area where I would have an interest on minor or partial type entries, and should that area fail, then I'm going to be willing to bet that we at least get down into the 1083.26 area, or at least very close to that. So for the Russell 2000, for me personally, I'm not going to be looking at small caps for entries in the upcoming week. I think that the risk outweighs the reward on them at this point in time, and I think there's better trades to be looking for right now. Now over to the COMP chart. This is the Nasdaq Composite chart. Monday looked like it was going to be the most outstanding short opportunity in the Nasdaq that we would get as we failed out of that consolidation range. But as you see, Tuesday came back very, very quickly to close right back at it. Gave you some continuation, but your continuation, though by price, made a new all-time high. You see that was just a gap up on Friday and a pullback from. And essentially what it's done is it created the need for you to simply change the consolidation range that you have annotated on your chart. We'll go with something more along the lines of this now. And as you can see, even though the little bubble on my chart says, hey, it made a new all-time high price, it pretty much double topped. With this, it actually only broke it by a few cents. Very, very minute overall price break. Still closed down back and below and within the consolidation high swing point. So very, very interesting now on the Nasdaq charts, because what we kind of had is we'd had a series of momentum trades that we had covered here and called out and presented in the market overview videos, with the momentum range breakout here, the horizontal support trade here, and the momentum range break here. And now that we've had that series of trades, we could see some slowdown overall in the COMP. Now the big difference in the COMP chart and the NDX that's happened quite a bit differently, a little bit of separation with the Nasdaq 100. That's what the NDX is. It's the Nasdaq 100 and not just the composite of the entire Nasdaq. But we were able still on Thursday to break out and Friday to still close above that daily high swing point. So a little bit of difference between the Nasdaq as a whole and the Nasdaq 100. We did see late day moves, big moves, on a few Nasdaq stocks. Twitter, well, Twitter's New York Stock Exchange, so I'm sorry. Facebook made a big move. I was thinking the social media aspect in the correlation there. But some big moves that happened late in the day, but ironically, right into the close for the market and in the after hours on Friday, we saw quite a lot of that given back. Facebook ran up to $78 to close the day on Friday and fell back. I know within the first hour of the after hours I was still watching it. It was down at $79.50. It had already given back 50 cents. So, or $77.50, I'm sorry. But it was quite a funny move that was made late Friday with some of the Nasdaq stocks that was quite odd, because you also saw NDX stocks like Apple in that last hour of the day Friday give up specific trend lines that they had been trading on just over the past few weeks, just shorter term stuff, and came down and actually gave up those trend lines for the shorter term trading just in the last hour. So it was a bit of an equal and opposite type move made on some of the Nasdaq stocks late in the day on Friday, and that's going to make things really, really interesting going into tomorrow, because we've gotten quite a ways away from this trend line that I have annotated here. And though I thought this past week we would at least come down and retest that area, we didn't do it. We got a little bump from it. The way things kind of traded through the FOMC policy release and whatnot, it didn't seem very convincing, to me at least, that there was a lot of strength right away, although things came up a little bit at that time. So I'm still not quite convinced that we didn't see a little bit of a head fake late in the week, and that we might not get another entry before the next series of longs. So it's going to be really, really interesting to watch some of your big name technology stocks and whatnot that take off this week. Another thing I'd like to point out, on Friday we had a large IPO, biggest IPO in history, Alibaba, ticker symbol BABA. And it opened trading to the average Joe. You know, when you look at it on the television set, they say, oh, it was up $25 for the day. The fact of the matter is, you and I and nobody else we know was able to buy shares of Alibaba at $68. Trading opened at $93 on Alibaba on Friday. It quickly ran up just shy of $100 and then gave back every bit of it, and even dropped below the open price to barely come up and in the after hours rise above that $93 price range. So, you know, I love to hear the talking heads on CNBC and such talk about, oh, this IPO did great, it was up $25 per share, knowing good and well that nobody that was trading it or took the entry on it on Friday could have had that. That money went to the brokers who did the IPO, that $25 a share. So I would really be watching that IPO, not with an interest personally right now in buying it, but I would be watching for something similar to what we saw in Facebook's IPO. And the reason I say that is, for as overhyped as that IPO was, and for the trading to open at $93 and for us to finish the day basically right at the same point, it reminds me of exactly what I saw on Facebook, where we had a spike from the open when trading started, and it closed the first day red, but slightly close to where it had opened up trading. And I think that if we see another botched IPO, botched in the sense of like Facebook or a Zynga was, that it could have an effect due to the string of IPOs we've had and the success that they've had, things like GoPro and El Pollo Loco, that did very, very well from their IPO. And I do have a concern that the most hyped up IPO in a long time didn't quite do much for the average Joe trader who may have been waiting to buy it. So I do personally think that if we see continuation to the downside of BABA in the upcoming trading week, that it could have an effect towards people's market sentiment, and could maybe be a gauge for us in the short term. And in the short term only is what I'm stating. So anyway, this is Coach Mike from winningstockcoach.com. Wishing you the best of luck in the upcoming trading week. God bless all of you.